Hello, everyone. Joshua Hayes at BigWaveTrading.com. We'll take a look at Telechart version 7, the antiquated, archaic version of Telechart, and then move to 25. I have a couple of speculative swing long positions in the biotech area, and they have earnings coming up, but it's going to be over 10 days. So I'm going to take them both. But I want to make it quite clear they are not quality. And these grade A setups that I've been looking for ever since this 10-10 sell off, I just cannot get grade A setups. My scans are set up to find them all, and I have no problem finding them all. And in fact, I did get one today, and we'll review it here in a minute, but it has earnings on November the 5th. I'm a swing trader that likes to turn my swing trades into position trades if it's allowed. And that's just not enough time. Now, can you trade them ahead of earnings? Sure. Yesterday, I passed on MNMD. Here was the signal. You get a little bop surge, the bottom indicator. You get a volume surge, volume truncation, and you get basically a price hammer candle right off the 21 EMA with a pocket pivot point signal, with previous pocket pivot point signals, heavy volume and low volume in the most recent consolidation. I couldn't do it because it had earnings within 5 days. But you'll see 1 day gain is 6%. Congratulations to anybody that took it. I simply can't. Now, maybe I can and just need to get out before earnings. I'll start to consider that. But I also liked the UU setup, and it didn't work. And it ended up as a loss. But this setup still, to me, looks great. And that's just it. There's a lot of great looking setups, but earnings is the issue with all of them. VFF, I love this low volume consolidation. Earnings are coming up. SLDP, I would say that this isn't quite a grade A long signal, but it's damn close for me because SLDP is in a ton of my high momentum scans. Beautiful pocket pivot point signal, mini volume, bop, relative strength, price surge, hammer candle off the 21. Earnings are on the 4th, I believe, November 4th. So I have to pass on this one too. AQST, nice quiet volume here at the 21 EMA. Earnings are coming up. I got to pass on it. RKLB, look at the volume drying up as it sits on the 21 EMA. Got to pass on it. Earnings are coming up. KTOS, nice quiet volume of the 21 EMA. I love these kinds of setups, but earnings are coming up next week. So they're all a pass. Open, beautiful consolidation on quiet volume. Pocket pivot point signal today. Front run and early entry just risking to the recent lows. I can't do it. Earnings are next week, and it happens over and over and over. This speculative name had earnings tonight. SUPX. TEM, beautiful consolidation. Look at volume drying up. Look at the 50-day volume average falling down. Has earnings coming up. I can't do it. Then there's stocks like FCell, too big of a move, but I'm watching this one for an inside hammer candle or a back test of the 21 EMA for a long signal. There's just a lot of stocks out there. In SSC, nice tight consolidation 21 EMA. Earnings are coming up. QS, at least I don't have to worry about earnings. They're out of the way on this session, but too big of a move today, and I didn't have quiet volume as it consolidates. However, if QS can pull back, consolidate on quiet volume, give me a hammer off the 21 EMA, I would be very, 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 very interested. Now, which one do I consider grade A that I can't take? Well, Joby. Joby to me is close to being a grade A. Beautiful consolidation, beautiful chart. I have it above the 21 EMA, which is above the 50, candle over candle, heavier volume after low volume yesterday. Beautiful 3-day. I would love to get long above the high of the day, risking to this low, but earnings are on the 5th. So I just simply cannot. I have to be disciplined. Could you take it and in a 1 day, if it pops like MNMD, lock in all your gains? Absolutely. But it's not how I personally trade. I don't take trades like that. I don't short-term swing trade like that. I need different kinds of setups. But JOBY is a great setup. Now, actually, I want to move to version 25 so I can show you, because to be grade A, I do need this to be going for it. I have the 5 above the 9, above the 21, above the 50. I only have one green, but I have a slingshot in the TTM trend momentum. Like I said, I've said it multiple times. Price is all that matters. Everything else is just tertiary, quaternary after volume, which is secondary. But here, once again, in Joby, you can see that beautiful, beautiful base, that beautiful consolidation. This is a long signal every time, and I'm using JOBX, 2X if I take it, every single time, unless earnings are coming up. And a major binary event is coming up, so I have to pass on it. Now let's review some of the others. SLDP, beautiful, 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 beautiful. Is there any issues? Yes. The 5 is still below the 9 EMA. That's a check mark against it. TTM trend momentum has not turned yet. That's a check mark against it. So there are a few things going against this one as well. And this just goes for a lot of them. I got to have that 5 above the 9 for the best kinds of setups. So actually, since there is nothing that I want to take, I'm also going to pass on PL, but PL, see how the 5 is below the 21 and the 9? It's not quite there, but here's another beautiful consolidation that I would love to take. I do have a slingshot showing up in the TTM trend momentum, but the volume surge to me, it's not quite there. I need to have everything. In this market especially because it's just it's wild. Just to let you guys know, I'm seeing things that make me very nervous about quote quote nervous about this uptrend. The NAAIM exposure index came in over 100 on Thursday. It's only done that 17 times since 2006, and that's as far back as the data goes. All 17 times, or this is the 17th, all previous 16 other times leads to a pullback. The NAAIM exposure index is one of the best topping sentiment gauges I know of. There's plenty that work great near bottoms. Once you get a follow through day, you can be kind of like, yes, I got everything lining up, sentiment and the follow through day. Everything's lining up. But these sentiment indicators don't work that well trying to find a top besides the NAAIM. And anytime it's over 100, huge red flags to me, and it's no difference. This market is getting very narrow, and that can be seen in the RSP. I don't have a relative strength line up, but ever since this April low, the relative strength line has done this straight down while this index kind of moves higher. And I take my marching orders from the QQQ. But at this point, 6 months into the rally, I would like to see breadth and the new highs. And we had a Hindenburg omen also last week. I would like to see that be much better than what we're seeing right now. So I wouldn't dare short this market. I've already told you I'm going all in still on every trade. I got 2 speculative long positions tonight. They can't go in the main swing portfolio, but in the secondary, the speculative quality portfolio, whatever capital is available, non-margin. I'm not on margin currently because of the way this market is structured. That capital, whatever it is, even if it's like 99% cash, all in if they both fill on Monday. All in. And that's how I will continue to operate until the market actually tops. But I'm seeing excessive warning signs, and I'm going to let everybody know in this video lesson, since it goes out to everybody on YouTube. If the SPY manages to hit 720 before a significant pullback, I will be selling anywhere from 10% to probably, more than likely, 20% of my long-term portfolio and raising 20% cash there to then buy back on any pullback. And if we can pull back 10% to 20% in the market, 10%, 50% goes back in. 20% pullback, which at these levels would be right around SPY 550, I'm back to being all in the long-term portfolio. And I'm going to remind everybody, I went all in here, took profits on positions and built up cash levels via the swing accounts, putting into the long-term portfolio. I was all in here for this leg higher. I was buying on the way down and went all in on the day that we bottomed in the long-term portfolio. I haven't sold large position sizes in the long-term portfolio since the end of 2021. I would be doing so again if we get to SPY 720 before the end of the year or at some point in 2026, expecting a cyclical bear market pullback. I am a secular bull into 2034, 2035, so I want to make that clear. I'm still long and going all in anytime I get a long signal on the swing position side. But my red flags to be looking for a significant market pull, they're all up there now. I mean, I'm starting to get everything lined up. But until it actually happens, I'm not going to act on it. That's silly. So, with everything that's being said, I'm also going to be passing on AVAV, beautiful hammer candle off the 21 EMA. But once again, I don't have a slingshot. I don't have a light red bar. If I did, I would get long above the high of the day, risking just to this low. It's an excellent, excellent entry point. I'm not going to take it. Feel free to take it. Now, what am I going to actually take this evening? I'm going to get long ATAI, and I'll tell you why. ATAI is still being bought actively by Kathy Wood. She is still buying this one. And even though it's hard to see, the 5 EMA is above the 9 EMA, is above the 21 EMA, above the 50. I don't have a slingshot, but I have positive TTM trend momentum, and I am green in one of these indicators. And if I get long above the high of the day, risking to this low, the last time this set up for me, and I did not take this trade because it didn't touch the 21 EMA, was right here and right here. I didn't take this trade, and ATAI in a few days, 30%, and to the recent highs, 140%. If ATAI wants to move 140% for me, my inherent risk on this trade is about 4 to 5% to hopefully make another 100% gain. So that's why I'm going to take ATAI. I got the 5 above the 9. I have the TTM trend momentum above the 0 line. And I also happen to have Max Green Bop on Telechart version 7. So there's an added technical reason behind the trade. And the ATR volatility stop is below the current price. So I'm lined up on a lot. I'm not lined up on everything. On the weekly, I'm triple green. I love to see that. On the daily, I've got 1 green. I love to see that. I got TTM trend momentum above 0. I'm in a squeeze. I got a hammer off the 21. I have all the EMAs properly stacked. So this is near a grade A setup in this kind of market. Now, ATAI has earnings in 18 days. That gives me plenty of time. I don't foresee a binary event before earnings. So my game plan is to get long above 591, 592, have a 2% limit offset to that trade. So what is that, around $6? $6.12, probably a limit to my 592 buy stop. And then if it triggers and fills, today's low of the day is my final cut loss. So this is an excellent setup. This is what I'm looking for. If AVAV had the 5 above the 9, I'd probably get long this name too, because earnings aren't an issue with this one either. So that's my trade for everyone for Monday. I wouldn't consider it fully grade A, but it's damn close. Anyway, I'm going to leave it there. Have a wonderful rest of your weekend, everyone. Everyone. I have been really fumbling my words lately. I think I'm having a stroke. Happy trading. Have a great weekend once again. Aloha.